Richard D. Wolff is a professor of economics at the Graduate Program in International Affairs of the New School University in New York. He has said that politicians in capitalist countries around the world find themselves in difficult positions because they are constantly tempted by a fundamental dysfunction of the system. Business and the rich want the government to serve them and not tax them, and so does the mass of people. They usually give both sides what they want, and they solve the problem by borrowing. Professor Wolff maintains that a deficit is a service to the rich. I spoke to him to find out why.
The purpose of a deficit in modern capitalist economies like the United States or Greece is a kind of way of managing the government. Let us assume that the government needs to spend money and take care of its people in 1,000 different ways, whether it's running transportation or schools or hospitals. The question then arises, how does the government raise the money? And basically it has two fundamental options most of the time. It either taxes or it borrows the money. In most societies, taxation is a broad-based phenomena. It taxes all the different people. And so the question is, when you don't tax enough to pay for what the government does, what is it that you are doing? You are running a deficit. And in most capitalist countries, it basically works like this. Politically, it is too difficult for the government to dare to tax the rich corporations, those who have political power, and those who have most of the wealth. So it doesn't do that. Instead, it taxes the mass of people, but you can only do that to a certain point before you also have a political problem. So then the final solution is to borrow the money. You go to the same corporations and rich from whom you did not have the courage to tax, and instead you borrow the money from them, which only means that over the next period of time afterwards, the mass of people will once again have to pay not only the tax for their share, but they'll have to pay the money to pay back corporations and the rich for the loans they've made to the government. To make a long story short, deficits are a way of compromise for the government. It doesn't have to face the anger of wealthy people and corporations, and instead it gives them a wonderful deal. We won't tax you. Instead, we'll cover the costs of government by borrowing the money and then having to pay you back forever afterwards.
So what you're saying is that the Greek government, for example, could solve its deficit problem by taxing its wealth.
Absolutely, and everyone really knows it. It's a political question. Will the Greek government, left or right, center, it doesn't really matter, will it finally have the courage to go to that part of Greek society, the larger corporations, the top 5 or 10% of the people, and say to them, you know, you have become very wealthy, particularly over the last 30 years. You are the ones most able to pay. You are the ones who ought to, in a time of national crisis, economic crisis, do more than you've been doing to help the situation. So for the first time, instead of borrowing more from you and having the government even more in your debt, this time we are going to tax you and solve the economic problems of this society with your help, whether you're willing to do it or not. And by the way, it's important for Greek people to understand that you are not unique in this. This is the same problem that we have in the United States. It's the same problem in Britain or France or Germany.
The European Central Bank President Zan Klod Trissé has rejected any idea of Ireland or Greece defaulting partly on their sovereign bonds in order to ease their debt burden. He said that forcing investors to take losses by restructuring national debt would reward speculators. Would you say that this strategy is in Ireland's and Greece's favor?
No, I think this is an attempt to solve the problems of other societies, including France and Germany, at the expense of Greece and Ireland. Not so long ago, less than 10 years ago, another country, an important country called Argentina, decided to default on its sovereign debt, which it did. And it made investors around the world have to accept something between 50 and 60 cents on the dollar for the money that they had poured into Argentina. Argentina is now well on the road to economic recovery. It has been for several years. It is a simple proof that when you renegotiate your debts because you're in an extreme situation, this can be a mechanism where everybody sacrifices and you get out of the difficulty. I would also remind you that every day in every capitalist country, banks are negotiating with borrowers who can no longer pay. Restructuring of debt is a daily occurrence. The investors, of course, don't want it. They want the borrower, they want who they invested in to keep paying. So, of course, the investors in Greek bonds and Irish bonds want to keep getting paid. But the crisis that has overtaken Ireland and Greece, which are hardly been caused by Ireland and Greece, that's an international capitalist crisis. And those investors understood when they purchased Greek bonds or Irish bonds, they were taking a risk. Sometimes your risks work out, sometimes they don't. It is a strange idea that when other borrowers are constantly renegotiating their debts, that somehow Greek people and Irish people should not be given the same opportunity to do that in crisis situations that are normally provided in capitalism.
How does the Eurozone as a whole benefit from Ireland and Greece not defaulting on their debt?
Well, it becomes easier for them to borrow. You know, if Ireland defaults, if Greece defaults, if they renegotiate the debt, then of course investors are going to feel a little more uncomfortable and going to be less willing to lend to many other countries, and not just countries like Portugal or Spain or Eastern European countries, but also to France and Germany. It means that there will be some more difficulties that have to be worked out. But when you're in a global crisis of the sort you're in now, there are going to be difficulties everywhere because the German and French and British governments bought, for example, so many of the toxic assets of the United States, the mortgage-backed securities that are no good. There's a global crisis. Greece and Ireland are not big or strong enough to have caused that global crisis. That global crisis was caused much more by the biggest countries, led by the United States. The pain, therefore, has to be reasonably distributed among those who particularly caused it. That doesn't include Greece and Ireland. So in order to focus it all on Greece and Ireland, you have to want to avoid the pain of adjustment elsewhere. That's what's going on. The British leaders, the French, the Germans, business community, they would like to escape from the economic costs of this crisis, and they would like to see all of those borne by poorer countries like Greece and Ireland. So if you destroy your own economy in order to keep paying off your sovereign debt, you save them from the economic pain that they really ought to be bearing because they had more to do with bringing this crisis than Ireland or Greece ever could have.
We have seen that the European Financial Stability Facility has not been able to calm the markets yet. If this facility is strengthened and its scope of operation expanded, will it be able to protect the Eurozone?
It depends on the larger policies that are followed in Europe. It depends a lot on what the French and the Germans and the British and the Italians and so on, what they finally do in this situation, whether they're prepared of the economic problems that have come up in this crisis. That's a fundamental question. No particular agency, no particular body, either in these countries or across these countries, can reasonably be asked to solve this problem by itself. For example, if the German economy, because it is the strongest right now, because it has such a high level of employment and exports doing so well, they would have to be prepared one way or another to take some of the burden of this crisis onto themselves, whether it's through the financial agencies that they've created or through a change in their wage structure that benefits moving more production out of Germany and into countries like Greece and Ireland and so on. These are the questions they have to ask. They don't want to do it. They would like as much of this burden to be carried by other societies as they possibly can. Let me give you a parallel of this. Here in the United States, we have been speaking for a year and a half about a quote-unquote recovery. All that has happened in the United States is that the business community has succeeded in getting the government to pour huge amounts of money into banks and insurance companies and large corporations. Their profits have recovered. The mass of unemployment has not been touched. The foreclosures, people being thrown out of their homes, is larger in 2011 than it was in either of the previous 2 to 3 years. So what we're seeing in the United States is, I think, what you're seeing in Europe. A recovery for some, and indeed for those who were most responsible for bringing the crisis, who have received most of the benefits of government money to date, and they have decided to try to push the burden of paying for all of this onto the poorest and the least strong among them. In our country, it's the mass of the working class. In Europe, it's the working class, especially in the poorer countries like Greece and Ireland.
What you're saying is that Germany, for example, which is the strongest economy in Europe, should take part of the burden for this financial crisis. But on the other hand, what they're doing is they are lending money to countries like Greece and Ireland with an extreme interest rate instead.
Yes, and I think you can see very clearly what is going on. The largest holders, for example, of Greek sovereign debt, of Irish sovereign debt, of Portuguese and Spanish sovereign debt, Italian sovereign debt, the largest holders of these are the biggest banks in Europe, particularly those in France and Germany and so forth. If you permitted the renegotiation of debt as it should be done, Greek debt, Irish debt, and so on, so that in a sense you make the investors, which are in this case large European banks, take a haircut, we call that in the United States, have to give up some of their wealth because of the crisis that their behavior produced, then you would put the problem in the hands of the German, French, and British governments because they would have to bail out their banks again. They would have to help those banks because those banks' investments in Greek and Irish bonds had been cut in half, say. That's what they don't want to have to do. That's politically difficult for them. They would then have to bear the blame. They would have to feel the pain of an economic adjustment. But that's what ought to be happening now. They ought to be facing that situation, and they don't want to have to do that. They would prefer that the Greek government cut its wages, lay off its workers, that all the pain be concentrated somewhere else rather than being taken out on the big banks in those countries and then on the governments in those countries who would have to step in and help the banks, which they don't want to have to do.
Now, Professor Wolff, how would you assess the International Monetary Fund's track record up to now with the programs it has implemented in the various countries it has lent money to?
It has a long history of being mostly interested in maintaining the concerns and serving the interests of the biggest banks, the biggest and richest countries. No smaller country, and certainly no mass of the working class in any country has anything to hope for the International Monetary Fund. That's not what they do. That's what they have never done. They will be waiting till the last possible moment, and only under massive political pressure will the International Monetary Fund take any step that really resolves these kinds of questions. Their participation in the Greek solutions of last year, and I put the word solutions in quotation marks, but their participation was only as an adjunct to a policy that was worked out that basically threatened Greece, and it's doing the same in other countries, threatened them with even worse difficulties if they didn't knuckle under and perform this act of literally economic self-destruction in the name of solving a problem. You know, it is clear, both in the case of Greece and even more in the case of Ireland, that the austerity programs supported and promoted by the IMF, for example, that these problems in many ways make the economic crisis worse. They are not solutions. They maintain the income flow of the banks and investors, but they do so at the price of economic damage done to the underlying working class, commitment to labor, infrastructure, social structure of a country that is put through this kind of crisis. You can see it in Ireland, you can see it in Greece, but by the way, you could even see it in England. This is a way to help one sector of the economy, but it's at the long-term cost of the whole system. For many of us as economists, what we think we are observing is not only the saving of a small financial core of the economy at the expense of everybody else, but we don't think that's a successful policy, and it's more and more of looking to us like it's a kind of capitalism that is imploding, that is shooting itself in the foot, that is undercutting its own long-term survivability by this horrifically ineffective short-term effort to get out of the crisis for the few who produced it at the expense of the many who will determine the future of the economy.
Prime Minister George Papandreu was a student of yours at Amherst University in Massachusetts. If he came to you for advice, how would you suggest he handles Greece's current financial problem?
Well, I think, it's not my place to tell him, of course, but here's my thought. There are two ways to go in the middle of an economic crisis. You can be very frightened, and you can do what the powerful tell you to do, and forget the fact that the powerful are telling you to do something that's good for them, but not good for the mass of people. That's one way to go. There is an alternative, and that alternative is to become a champion of getting out of the crisis, not by helping the top and then hoping that the benefits trickle down. We call that in the United States trickle-down theory, but to go the other way, to focus your efforts to rebuild a broken capitalism by helping those at the bottom, by providing more jobs, not fewer, by paying better salaries, not lower ones, in the hope and in the belief that the benefits will trickle up to the corporations who will have better workers and better consumers. When Franklin Roosevelt did that in the United States in the 1930s, the last time we had a crisis of this sort, he became the most popular president that ever existed in our country. President Roosevelt was reelected 4 times consecutively to the presidency of the United States. That had never happened before. It has never happened since because the Republican Party got so frightened it passed a law saying you can't be president more than twice. I wonder whether it doesn't occur to Papandreu, in the tradition of his own family and his grandfather and so on, that it might be time to consider, even on a political basis, whether he might not prefer to be remembered in Greek history as the man who in a time of crisis took the idea, let me work from the bottom up. Let me try to rebuild this crisis by becoming a hero for the mass of people, by saying we build an economy from the foundation of its people and not on the basis of a financial oligarchy and a collection of big corporations that did very little to prevent this